What is going on, investors? Hopefully guys are doing well out there. Time to catch a ride with Uber today after the company reported their Q3 earnings this morning. We'll get into them. We'll take a look at the bookings. We'll take a look at the different business units they have, primarily the traditional Uber ride, but also they have Uber Eats as well. They also have this very fast growing freight business. Talk about all of that. We'll get into the numbers. We'll take a look at the balance sheet. We'll take a look at the progress that this company is making to finally turn a profit. And then we'll come over here and look at this from a technical perspective. I think you're going to like what you see here from a technical perspective. Interesting setup. We'll talk about all of that on today's show. Over the last year, this stock is down big, down 32% year to date. Basically the same story. We've got a $54 billion market cap on this one. Keep that in mind as we roll through these financials. As I start to look out into the future with this one, it starts to make a little bit of sense, at least from a price to sales basis. We'll talk about that here in a second, but I want to talk about the Q3 press release, which came out this morning. Revenue coming in at about $8.34 billion. That was just 72% year over year growth on that one, and it beat expectations by about $220 million. They also gave fourth quarter guidance, which was relatively in line with what the market was expecting. You should see another quarter in the fourth quarter coming in at right about $8.6 billion. That would still represent, again, this is for the upcoming quarter, 49% growth. The current quarter, we were expecting just 67% growth, and the company came in at 72% growth. When we start to look out with Uber, we've got a really strong growth rate over the next couple of quarters, and then they're going to come up against some pretty difficult comps from kind of the opening of the economy, everybody kind of going on a vacation and those types of things. But you're still looking at like mid-teens growth out into next year and into 2024. And then when you get into 2024, you're looking at a $10 billion quarterly run rate on this one. So that gets you right around $40 billion in total sales. And then when you're looking at profitability, that is when it's going to line up. When we walk through these financials, you'll see another billion or two on the revenue side should tip you into GAAP profits. And that's what Wall Street is anticipating. So if you are buying this stock now, yes, you are paying this $54 billion market cap, but you are hoping that it grows into profitability and a $10 billion quarterly run rate on those sales by the end of 2023 and into 2024. If it's able to do that, again, you're paying just a shade over one-time sales, which is probably not the most ridiculous valuation when we walk through this, but there is some risk here. You really need those consumers to remain strong. You need them to do food delivery, which tends to cost a little bit more, obviously, if you go out and buy that yourself, but also taking rides. I was in Las Vegas last week, and I was with my brother who actually lived in Las Vegas for several months, over half a year, and he was like, this is as busy as I've ever seen it, like on a Monday or a Tuesday. It was wall to wall, and we were kind of just walking through the casinos, like shaking our heads, like, where are all these people getting their money? And there's certainly not an evidence in kind of that consumer slowdown, at least when you walk through Las Vegas. Obviously anecdotal evidence, but that consumer needs to remain strong. They need to go on vacations. They need to take business trips. They need to obviously take Ubers. If you are of the belief that that is going to maintain, well, this company should capture quite a bit of it. We see gross bookings over the last year up considerably in their mobility. This is your traditional Uber ride. As more people are taking vacations, more people are going back to the office and taking those Uber rides. Your delivery up just a little bit less. This is on a constant currency, up about 13%. The explosive growth that we saw there, obviously starting to lap very difficult comps. Now, when you come down to revenue, you're really seeing the mobility business start to come back. A year ago, that delivery business from a revenue perspective actually exceeded mobility, and now we're starting to see mobility come back. Your traditional Uber ride delivering $3.8 billion worth of revenue, delivery 2.7. Now look at this freight business. It's just creeping up. Last year, just $402 million, all the way up to $1.8 billion. They're doing a nice job growing that business. Obviously could have more of an impact on revenues and profits into the future. The company kicks you off with a balance sheet, and things look good from a balance sheet perspective. They have plenty of cash based on the type of cash flows, which we'll see here in a moment from their operating. They do carry a little bit of long-term debt, but nothing really I'd be super concerned about from a balance sheet perspective. Coming down to the profit and loss statement, we see that sensational $8.34 billion number that we talked about from the press release here. That was 72% growth year over year. Last year, you were right around $4.9 billion worth of revenue. Now, the all important thing for Uber is how is this revenue number scaling up with the rest of their expenses? Now, this is not a software type margin business. They obviously have to share a lot of the revenue, either with the restaurants that are making the food and delivering the food, but also the delivery drivers themselves obviously collect a portion of that revenue as well. And so you see off $8.34 billion worth of revenue, $5.2 billion is actually absorbed in cost. So Uber really has to kind of keep a lid on the rest of their costs. And I actually noticed they did a pretty good job on that. Operation and support went from 475 up to 617. Again, they grew their revenue 72%. So you're going to expect growth here on the other cost, but it didn't grow that much. Look at sales and marketing. There is some brand here and there's brand recognition. On top of that, they essentially operate, I guess you could call it almost like a duopoly with Uber and Lyft. If you were going to catch a ride, it's going to likely be between one of those two companies. Food delivery is probably spread out a little bit wider, but look, they didn't have to spend to grow their revenue 70%. They actually spent less on marketing, 1.17 last year, this year down to 1.6. I really like that about Uber. You've got research and development ticked up a little bit from 500 up to 760. Your general administrative costs ticked up quite a bit as well from 625 to 908. And then finally, you have a non-cash charge here. A depreciation and amortization went from 218 up to 227. So if you take your $8.34 billion worth of revenue, we had $8.8 billion in costs. That gives you a loss from operations right at $500 million. That's actually slightly better than last year when you lost $572 million, but this is essentially a rounding error. And then when you factor in depreciation and amortization is a non-cash charge, there's other things in these expenses that are non-cash, particularly stock-based compensation. But the one you can strip off almost dollar for dollar, I think you can do this. You can take this $200 million and go ahead and add it to your loss from operations. And again, you are a rounding error away from being profitable. That's why when we looked out into 2023, particularly late 2023 and into 2024, if you can bolt on another $1.5 billion to $2 billion worth of revenue to this company, it will absolutely turn it to a positive from an operating perspective. And likely you flow all the way down to net income. It's probably going to produce positive income results as well. At least that's what Wall Street is projecting as well. And that's what these numbers project. For the 9-month period, it paints a similar story off of $23.3 billion worth of revenue. We had roughly $25 billion worth of costs. That gives us a loss from operations right at about $1.7 billion. This company is right there at about a $500 to $600 million loss every quarter, which again, very manageable when you factor in some of these charges up here are non-cash, including stock-based compensation, including depreciation. This company is on the tipping point of profitability. That's why I brought up in the beginning, you gotta hope this consumer remains strong. You gotta hope they continue to take these vacations. Business travel comes back. Urban centers come back. People move back to New York City, back into San Francisco. That is where the bulk of this business comes from. And obviously the food and the freight have got to maintain their revenues and their growth rates as well. When you come down here to cash flows, it shows you that this company actually is in a good spot from an operating perspective. Most recent quarter, we pulled down a net loss of $1.2 billion. You get to add things like stock-based compensation, which came in at $482 million. The already mentioned depreciation and amortization, you get to add that back in at $227 million. You come all the way down here, net cash provided by operating Uber, and it was a positive $432 million. Last year, you were at $614 million. You see for the last 9 months ended here, the company's generated about $886 million worth of operating cash. The other thing that's interesting and actually good for a shareholder perspective about Uber is they really don't have to, it's not a capital intensive business, okay? They're not buying the cars to drive these things around. They don't have to invest in like warehouses and things like that. It's just simply a platform. You see, they barely spent anything on purchase of property, plant, and equipment. They didn't spend a lot from investing activities. And you come down to financing activities, not a lot there. So they actually increased their cash by over $770 million over the last 3 months, over the last 9 months, $829 million. These are very, very strong results from Uber. And I think if your investment in this company, these financials are good enough. The valuation is not, I wouldn't call this a value stock or a cheap stock from a valuation perspective. It's probably priced to perfection at kind of a forward price to sales if and when they reach this kind of $42 billion mark on sales, a little over one-time sales. Its valuation is decent enough. Again, you have to buy that the consumer is going to remain strong. Urban centers open back up. People move back to San Francisco, back to LA, back to New York, and all those types of things, because that will drive the incremental growth year over year. When you come over here and look at it from a technical perspective, obviously I am recording this during the regular trade. Stock's up about 12% on these results. What I have here though is a weekly chart. So each one of these candles represents a week in time. And what I wanted to show you is I've got these green lines. I'm going to change them to purple just so we get some different colors on here. So these purple lines that are essentially horizontal, this is capturing a lot of the price history essentially since Uber has gone public, and the price action between about $28 up to about $38. That's where the bulk of these candles lie. Yes, there's some candles over $38, but anytime this stock has gotten over $38 per share, it has really reversed very quickly. Anything south of $28 and the stock also has reversed very quickly. So right now, sitting right at about $29 per share is not the worst area. Again, this is what I would call probably a relatively fair valuation, especially if you're looking forward with Uber and you've got an optimistic view on the economy. Now, the more intermediate trend is we have these two green downward channels going on with this stock. It did break down below it, but then really gapped up very quickly and got back into this channel. We're towards the top end of this channel, so you're really looking for two things. As a bull, you really need it to kind of break out over and above this channel and start putting some candles up here, and then subsequently maybe do a back test to the top of the channel line. That would be an interesting formation. That would be maybe the start of a new up channel or an uptrend, reversing the down channel that we're in. More than likely though, and the stock's price action kind of confirms it today, the stock was up quite a bit more. In fact, it was up over $31 per share, over $1 higher than where it's at right now. More than likely, I think we get rejected towards this top end of the channel, and then we pull back, probably back into the $25 range. If you make new lower lows on this one, I think that can be an area where if you already own Uber, you can dollar cost average. If you're looking, I would still categorize this as a speculative investment because we're speculating on the consumer remaining strong. I think it makes a lot of sense that this company's business is on fire right now, but where are we going to be a year or 2 years from now? That's certainly something that we have to ask ourselves. But from a fundamental perspective, they are on the tipping point of making a profit, and they are now operating cash flow positive. A lot of things to like about Uber. I tell you what, if this one was, $10-15 billion less on a market cap, it'd be even more attractive. Right now, I would say this one's relatively fairly valued. We'll continue to watch it here on the channel. Hopefully you guys enjoyed today's video. We got more videos coming. Good luck with your investments.